Iraqi Dinar Hub delivers essential financial insights on a development that many Iraqi Dinar holders worldwide have been watching with increasing attention. As 2025 progresses, measurable activity is emerging across the foreign exchange landscape, signaling a meaningful shift in the currency's global position. This is not the spread of rumors or speculative chatter. Instead, it comes from a thorough evaluation of transactional indicators and institutional trends pointing toward an active revaluation phase. The long stretch of anticipation seems to be approaching a decisive juncture, with market charts and trading desk observations showing a clear rise in the dinar's momentum. This growth appears methodical, following recognized frameworks used in structured currency adjustments. Incoming reports from various points within international financial channels, including insights from specialized traders and banking syndicates, suggest that major holders of the Iraqi dinar have already begun participating in private exchanges at modified values. These early institutional-level participants maintained their positions through years of financial volatility and uncertainty. Their current involvement stands as a strong indicator that a phased revaluation is in progress. The nature of these preliminary transactions shows a careful, controlled strategy by monetary authorities to test system resilience and regulate liquidity ahead of a wider public rollout. That understanding the mechanics behind these changes remains essential for all currency holders watching closely. A review of the foreign exchange markets shows the dinar's latest performance with unmistakable clarity. The upward movement is defined by steadiness and consistent direction, rather than erratic volatility. This stable incline is being reinforced by substantial institutional trading volumes, offering further confirmation that the rise is part of a coordinated effort. Analysts have long advised monitoring global currency platforms to identify crucial turning points for the dinar, and recent patterns validate that guidance. This reliable progression aligns perfectly with the opening stages of a structured revaluation aimed at long-term market stability. The observable shift across exchange platforms is now widely interpreted as the beginning of a carefully executed currency adjustment program. Such a sophisticated undertaking requires close coordination between Iraq's monetary authorities and major global financial institutions. Recent trading behavior should serve as a signal, especially to those who have doubted the currency's potential. What is unfolding closely mirrors historical examples of how central banks prepare for significant value recalibrations. The activity implies a deliberate plan now moving through its operational stages under a controlled timeline. A key observation in this transition is that the increased trading volume is not originating from individual retail traders. Instead, the scale of these movements clearly points toward the involvement of global banks, sovereign investment groups, and entities tied to central banking systems. Activity of this magnitude is rarely coincidental. When strong, uninterrupted upward trends coincide with noticeable spikes in trading volume across consecutive days, it typically marks the onset of significant financial repositioning happening behind the scenes. The dinar's behavior at this moment strongly reflects a coordinated plan in motion. Each incremental rise in value appears carefully managed, preventing sudden surges that might disrupt market equilibrium. This type of moderated ascent is a signature of modern institutional reevaluations. This included rebuilding foreign reserves, containing inflation, and implementing strict oversight of domestic liquidity. These improvements form the core economic conditions necessary for any major currency shift. The collective effect of these sustained reforms creates a solid base for a revaluation. In recent months, several final reforms were completed, signaling readiness for the next phase. These include expanded digital banking capabilities and the integration of Iraq's payment network with established global platforms. In addition, the deliberate reduction of Iraq's money supply is a strong signal of preparation for an upward adjustment in value. A noticeable decrease in foreign exchange auctions by the CBIA pattern, often seen before reevaluations, is currently evident in Iraq's operations. Lowering the supply of foreign currency within the domestic market aligns with the recognized strategies used by central banks worldwide prior to significant rate shifts. This targeted management of exchange supply demonstrates deliberate conditioning of the market. Tier 1 and Tier 2. Investors, those with substantial volumes of dinar, have already begun redeeming portions of their holdings through private channels. These individuals, who sustained their positions through years of economic unpredictability, are now seeing their strategy take form. The quiet, controlled nature of these early transactions reinforces the priority placed on stability throughout the revaluation process. It is important to stress that this revaluation is unfolding gradually rather than through a sudden dramatic overhaul. Expectations that the dinar would leap instantly to parity with the US dollar belong to outdated models. Today's currency adjustments follow phased, highly coordinated frameworks involving global financial institutions such as major banking networks and international settlement bodies. This structured approach mitigates risks related to speculation, liquidity imbalance, and financial shock. Even small daily increases on the foreign exchange platforms represent intentional steps within this broader strategy. These measured moves affirm support from high-level authorities overseeing the transition. Trading volume for the Iraqi dinar has surged dramatically, reportedly surpassing 400% within a brief window. Activity of this scale cannot be created by individual retail participation. It unmistakably points to institutional entities positioning themselves ahead of an official rate disclosure. Such movements mirror historical patterns observed before national currencies undergo major realignments, implying that the announcement phase may not be far away. This policy shift is a monumental step. Acquiring payment for oil, one of the world's most critical commodities, in dinar naturally boosts global demand for the currency, exerting upward pressure on its value. Combined with central bank reforms and synchronized adjustments within private banks, this new oil pricing strategy forms a strong foundation for the dinar's rising trajectory. Collectively, these actions restructure Iraq's global financial standing, reducing dependency on external currencies and reinforcing its independence. Another compelling indicator is the appearance of temporary placeholder values on internal bank screens, fluctuating within a projected range often discussed in high-level financial circles. Though these provisional figures are not final, they act as a clear demonstration that the new rate structure is being tested within the financial system. Recent Forex charts visually confirm the results of Iraq's multi-year stabilization efforts. The upward trend is authentic, supported by expanded gold and currency reserves, reduced inflation, and improved financial oversight. These factors showcase the strength of Iraq's economy and its readiness to support a higher-valued currency. Over the past 2 years, the nation has cracked down on corruption, tightened its regulatory framework, and ensured its banking sector meets global compliance standards. Foreign reserves now exceed the $100 billion mark. This substantial reserve level offers critical support as the dinar enters the revaluation phase, providing international markets with confidence. For long-time holders who endured years of uncertainty, current developments validate their patience and commitment. The initial private exchanges now being reported represent the first tangible returns from their strategy. These early phases are instrumental in verifying system liquidity and ensuring a stable transition. Although not yet available to the general public, these signs confirm that the revaluation process is advancing steadily toward broader implementation. Even in the midst of encouraging news, dinar holders must remain cautious. Periods of financial transition often attract fraudulent schemes, making it essential to rely only on regulated exchange channels.